Hello guys, welcome to the Train Parrot. As you can see, we are experiencing a confirmed breakout on the 4-hour time frame. But the question is, given that general markets are showing so much weakness, what is the upside that we can really get out of this W formation? In this video, we're going to discuss that. We're going to have a look at the general markets, pre-market prices. They're about to go live as well. We'll look into the order book. Really interesting things are going on that I want to share with you. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in this video? That will be phenomenal. As you can see, interest over time has confirmed with candle close a lower low on Bitcoin. This is on Google Trends when we were from 23. Those were the lows around end of February, and we managed to close at 21, so 2 points lower than the closing price on February. We are at 31st of March, so that means that if this is considered a breakout, when we went to 36 interest on Bitcoin, right now what we are having is a tough retest of that breakout of interest. This week we have some upcoming events that are definitely going to contribute to the volatility of the week, including the manufacturing PMI on the 1st of April, that's tomorrow, Tuesday. Job openings together with that. The expectation is a decrease to 7.63 million, coming from 774, that's the previous one. We have services PMI on Thursday, and then closing this week, we're going to have unemployment rate. That is going to give the full picture together with the job openings. And closing the week with the Federal Reserve speech, the unemployment rate at the moment, the forecast is expected to increase just 4.2% from a prior 4.1. I've got an upcoming video talking about the M2. I know, guys, you are all interested to know what is the lag that I'm seeing in terms of the performance of Bitcoin relative to the injections of liquidity in the global liquidity index M2. And I've been monitoring this very bullish on this moves up, but in the video that I'm about to release, I'm going to show you a period of time from past performance where the liquidity index was aggressively increasing and we still have a 72% drawdown. I want that video to get to most people as possible because at the moment millions of people are just buying into the idea that automatically M2 going up translates in Bitcoin going up as well with a delay. And I want to make sure that everybody understands that there is a fraction, a small fraction of scenarios where that is not the case. And particularly in those cases when it doesn't play out, it can be really, really tough. We're about to close March and in the red. If you remember right, the pattern for March being in the red based on a February in the red is what we were discussing. I made you aware that patterns in this cycle have played out based on past performance of month by month, only 50% of the time, but it looks like this time is going to play out at the moment at a 3.5% in the negative. Looking at April, post 2 months in the red, February and March, we can see in 2020 after having that, and this is more or less around the COVID period, where after a correction of 24.9 during March, we came out of April with a 34% up. The exception to that rule of going April in the green after 2 months in the red is in 2014 when we have a third month in the negative, this time with a 1.6 down. But after that, in May, we had a 39%. So we could say that after having February, March in the red, we should be expecting an April in the green, or still a flat April, but then a May big in the green. That is past performance. Again, 50% of the time, slightly more accuracy in terms of repeating past performance. Just an interesting information to have in the back of your head. Some indicators showing that we are losing support on big levels. One of them is this one that is 13 years old, where we've been holding this line and just breaking below it once in June 2022. And it seems like now we are losing that level. During 2021, this gray line in the Fibonacci MA was holding the price, with the exception of the topping year where we were spending around 3 to 4 months in between the gray and the green. And it seems like now we are entering that area between the gray and the green. The green is roughly at around 65K, just so you're aware. We have also lost that level in 2024, and we could say that we cover the whole area between gray and green as well. Going now into the 4-hour, we're back to talking about swing trade opportunity. This is a quite risky trade, and that's why I'm running it with very low volume, expecting it to be my first entry. What we can see in here is we have a double bottom formation on the 4-hour. Notice 4-hour in the context of a daily in a downtrend, a weekly also showing big signs of weakness as well. And the only reason I'm in a long in here is because I'm thinking to build a position while at the same time trying not to miss a revenge trade in here. What could happen if things go bad for the 4-hour is that we have a breakdown in here and we start forming some sort of double bottom formation on a lower range. If we were to do something like this, we will enter in the area of my second order according to my plan. If we manage to hold this, we could have a rally into around 50s. We say 56 if I remember right. And we're going to talk about all those levels. So there are at the moment 4 levels that we need to be tracking on the 4-hour time frame. The lower or the lowest level we could say is the global support, which is currently located at an RSI of 12. So it's 12, we could say 13 to be more precise. Then zooming in, the lowest percentile, which is these dots that you can see in here at the moment, are located at 27. Then we have the support that recently was resistance, which is the red line. All the weekend was still resistance. Now, hopefully, it's going to turn into support. We'll see about that. And if we manage to hold it as support, then we have the compensation. The reward is to get somewhere around 56, 57. So take note, RSI's 4-hour, 13, 27, let's say 28 and 56. If we take 80.9K on the 4-hour, we are basically faking out on this breakout on the 4-hour. If we manage to hold above 80.9, we could get a revenge rally into 84.5 at the moment. So that target, as you can see, they're both going lower. So if we take too long, this can drag like that, price can go like this and eventually move higher, but still meet with that resistance at a lower price, let's say 83.9. It all depends when it happens. In this case, I'm speculating that it happens as an example on Wednesday, but I believe that if we hold this level, if we get lucky and we close the CME gap that we produced this weekend, we're gonna cover that in the video, we could get as high as 84, give or take. Notice that this morning I made a very quick video, so make sure that you update the targets because they are different from the video in the morning. And if we lose that 80.9 and we were to go to the global support of the 4-hour at that 13 RSI, that takes us into 74K, more or less where I have my second order. Going to the daily, what happened over the weekend? Well, on Friday, we were still holding the support of 84. Now we have turned that 84 into resistance. That 84 is more or less around the same resistance coming from this downward sloping line. And remember, after we exit and re-enter this, we spoke about higher likelihood from now on to hit the bottom of the wedge once again. That is at around 74K on the daily time frame. If we have now that revenge rally on the 4-hour, it seems like that is just gonna give us enough strength to get to 84 point something. We really need to keep an eye on what's going on in there, because if general markets were to have now a decent swing high, we could exit from the falling wedge, in which case we need to be looking into 89. 89 is where we have the highest liquidity in the closest proximity to the price at the moment. Going to 84 is not that big of a reward for hitting liquidity pools, but 89 is. And that means that if we can get beyond that 84,500 and exit from the falling wedge, then we can hit 89. And if we get to 89, which is a higher high relative to what we managed to do last week, then we take the past week high and we have higher chances to carry on higher. And that is why I have that low volume position open in the red at the moment to potentially benefit from that swing. If that doesn't play out, then my next entry is inside the circle. If you're part of my Patreon, you know perfectly the plan. I might need to move today the order around here slightly because it's a moving target, right? If this falls straight into this line, where does it meet with? So I need to update that order. I will let all my Patreon users know that upfront, and I will disclose it publicly on YouTube, Telegram, Instagram, Twitter, to everybody for the sake of transparency. On the daily as well, we did a very disappointing move over Saturday. We broke below the channel in here, and as I say, that is taking a bullet on the daily. It's not great to go back below the yellow line as well because we broke out. We were supposed to just do a clean retest at 45 RSI. Instead of that, we are here at 41. Is that the end of the world? Not necessarily, because you can see that this is still a higher low relative to 32, pretty much 10 points higher. Therefore, we haven't lost all the hope for a push back into 60, for example. And again, that's another reason to still me being excited about some potential upside, although I have to say that having closed below 45 has reduced slightly the chances of getting that high in here. And that's why we might need to exit that long in profits, but maybe sooner if we see weakness or signals telling us to get out. On the weekly, we can interpret this reaction against the bull market support band as a rejection, pushing us back down into the next level of support, which is 80.5. That has held 3 weeks in a row the price and is risking, if we cross it, to go look up for next levels of support. But let's look into the past performance in the bull rally, how many times we got rejected by the bull market support band. And we have done it pretty much every year. In here, for example, in August, we saw a rejection. We spent 3 weeks below it as resistance. And in September, we reclaimed and we started heading for new highs. In 2024, same. We saw a rejection in August, 1 week below it, and then cross it back up. That gave us some upside from this bottom to being slightly above the bull market support band. That's a 33% up. Then we put a higher low, again 2 weeks as a resistance, and then we regain control above it. We test it as support, and that was the beginning of the rally. Although we were very well positioned already at 49k, 53, and I remember I had a third order as well around here after having sold at 73.5. All of that is publicly shared on Twitter. There has never ever been a single video or tweet that I have deleted with something I did wrong, so you are more than welcome to talk to anybody and watch all past videos. Indeed, to delete my mistakes, I will have to delete all the videos because every single call I make, I repeat it video by video, so I will have to pretty much delete a full month of videos to really trick like most of the other people are tricking you in the rest of the channels. On the weekly, the stochastic RSI hasn't put a bearish cross, but it's getting very close. The closing levels of the stochastic RSI on the weekly are this one, so it's still mouth open. And this means that if this week we were to defend the price action above 82, 84, 85, maybe we can manage to get this bullish cross early March to stay open. The weekly RSI, I'm not liking what I'm seeing because if you focus on this pattern in here, 1, 2, and 3, that was the attempt of the RSI weekly to regain the lost support from this ascending trend line. We spent 2 weeks above it and then we still lost it with a higher low. But after that, we remain in here, going back into 44. 44 is such a crucial level of RSI for Bitcoin. We tested the first time on the 4th of September 2023, but at that point, RSI was immaculate because we were still holding the line 1, 2, 3, and 4. Confluence of the ascending sloping with the 44, that was the perfect time to bounce beyond 40K. The second time that we meet with 44 RSI is in a different context. That is already having taken one bullet. We lost this trend line, the yellow one. We tried to reclaim it for 2 weeks, but we couldn't. So that is just one bullet, same RSI 44, but a completely different context. It's like entering the same room, but with a stab in the back. And where are we now? Well, we just came from bouncing from that 44 for a third time. But again, the context has changed once more. And unfortunately, we went above this yellow line, this new support that we have to put against the pivot of the second time we hit 44. The first time was this one. The second time is this one. And now we have spent 1 week above it, came back down. So we are in the context of 0.3. 1, 2, 3, 1, 2, 3. And that 2 is above and the 3 is below with a higher low. What happened after that 3 in here? We went for the dotted line and we saw a rejection back into 44 area. So if we did something like this, we could go to an RSI weekly of 50, see a rejection back into 44. And the thing is, are we gonna defend that 44 and do a breakout with a revenge rally to higher prices? Or are we just gonna lose it in here and then rally only into 51, which is a lot lower price for a rally? Well, we'll have to see. Going back into the swing context, we have a CME gap now formed over this weekend from 82.6 to 83.8. That is priced on Binance, on CME Premium, that is $82.5 to $84.60. And I think what the price is currently doing is testing that idea that we go and close the gap. But here is the massive red alert. If general markets continue to be pointing towards the downside, then I'm afraid that the upside for this could be just closing the gap. And be aware, because if there is a rug pull, price might go halfway or 3/4 of the CME gap and still see a rejection and new lower lows. If general markets flip into the green and we see some recovery, some relief moves from the general markets in the first 2-3 days of the week, we could go way beyond the 84. We could go to 89 and take that sweet liquidity that I'm about to show you. Pretty fun week, actually. Another thing that is getting very close to becoming at least short-term bullish is that the SOPR is about to pinch the lower band. That means that just too many people are closing at a loss. I show you over the weekend on Saturday that when the price of Bitcoin was around here, the SOPR on Bitcoin was still at a high. That means that they were taking profits in the green, they were taking profits, whereas in the rest of the weekend by Sunday, instead of taking profits, they were closing positions but at a loss. And when they do that, that becomes a bullish signal. All the green signals in this past performance that you're seeing, I'm showing you 2 cycles. All the green signals have some upside and were areas where people sold at a loss. The blue signals are when we cross the lower band, the green when we close the second lower band. We have 2 lower bands, right? So we have the yellow and the white. And now I cannot remember which one is which, but it doesn't really matter. I use both of them. They are percentiles of the SOPR. And we have a long signal coming from leverage squeeze. I published this on my Twitter. Make sure that you're following me. I publish all of them, not just the ones that are calling for a local top, like these ones that you can see in here, but also the ones that are calling for some upside. The most recent blue signal, we had it on 11th of March, published on Twitter. It had an upside actually higher than that. It went to 88K. That's a 13% up. And so far, this one is putting a new low. That can also happen. You can see that no signal is 100% perfect, but I'm excited to see some confluence for my first low volume order. The monthly is testing support on the RSI, so watch out for that. I have published plenty of videos where I compare with 2021. If we lose the monthly support, we can have a breakdown of the monthly like we had in the middle of 2021, and then we come back for a kiss goodbye. That is something that is only feasible in cycles where we don't have a blow off top. For example, in 2017, we lost the support of the RSI, but we never had that final kiss goodbye, and that is because this was a blow off top. From blow off top is pretty much a free fall. In the first half of 2021, that was not a blow off top, therefore it left investors wanting more, and they had their revenge rally into the same line. If we were to have something similar and we lose this line, we could later look up for something like this, a revenge rally, hopefully not a hopium rally. Make sure that you are subscribed to the channel in case we manage to get that. And looking at the open interest percentage-wise move in the 24 hours versus the move of the price in the last 24 hours in percentage as well, notice that this move down in the price, the open interest is moving lower than the percentage of the price, contrarian to what happened in this swing low, where the price went way lower and the open interest still increased a lot. And what I'm seeing in the past performance, just in this short term, there are tons of exception and edge cases, but what I'm seeing from mid-March into now is that every time that the open interest goes way deeper than the move of the price, we get a swing high at some point. Some little bit of hopium, don't take too serious this, I will say 60-70% chances of playing out, so we need to pair it with more information. Long-term holders continue to go higher in this area in here, which is making me think that they know something and that they are gonna continue to accumulate even if the price goes lower. Same with large holders, again, in accumulation area at this point in time. We are in fear at 34 today. Servers didn't close the signal in a buy. We are still in warning buy, which means I'm looking for longs. Let's go into the liquidity, starting with the short-term liquidity. We have a bucket of liquidity at 81. And remember that if we go below 80.8 and we start taking all this liquidity up until 80, or if we go to 79, of course, we will have faken out on the 4-hour breakout that we discussed earlier in the video. And of course, if we do a fake out in here, it's very likely that we are going to find a bottom information, but in a newer range, lower, possibly around the global support on the 4-hour. But if we ignore this 81, or if we just pinch 81 very quickly and we exit from the top, with RSIs over 37 on the 4-hour to fully complete the neckline of this double bottom formation, which is at 37 to be very precise, then we can start going. Number one, for this liquidity in here. That's number one. That is the lowest hanging fruit. That is how we close the CME gap. Not too difficult to get there, guys. And then there is number two, which is this bucket that starts from 84,500 to 85,800. That is a little bit more difficult. Then we have 3, which is 86.5, but it's actually 4, the one that is the largest one. This is the one that we haven't been able to hit all the way in here. It was just constantly lower highs. The market was just so bearish, the general markets, that market maker just managed to convince to trap everybody at 89, but it couldn't go and get it. So my thesis is that potentially they are just delaying that 89 for later. I don't know if this week, I don't know when, but eventually these people in here are gonna get target. The thing that we don't know is if it's from now or is after putting new lows. And reminder that 67K is constantly becoming thicker. That's the level 3 in here. That's longer term liquidity. And here you can see in CoinGlass what's currently going on. We went for 82.9 closer to where I took my first order. And since then, the price has been putting new lows, but the 4-hour has managed to put a double bottom, which is a bullish divergence on the 4-hour, promising that we can go slightly beyond that. And what is in this chart that stands out is the 89. That 85 is really just peanuts. And if we go to 84, there is liquidity, but it's almost transparent. There is just the CME gap. So crossing fingers, we can get to the 89. If we get to the 89, that will be a decent amount of profit for my initial long. And if we go below 80, we have that liquidity there that, as you can see, is larger than anything that we can take below 89. And is the recipe to make fail the double bottom, which we are currently standing on. Let's look at the liquidity levels of the past 30 days. You can see 89 still is the boss in here. If we take all these levels, we can take the CME gap and then get done with that upside. That is the current risk that we've been discussing in this video. After that, there is a vacuum up until 84.7. We have the 86 we mentioned before. And the recipe in here to kind of destroy that double bottom formation is this 80.9. We have a peak in there of liquidity that if we pinch and we don't bounce immediately up and we start going for these levels in here, then we could slip down lower into a new lower low as well. So let's see what we have. We have a pretty decent delta in liquidation levels, putting shorts at risk. 567k. So if we put that on the table and we get general markets to slightly push higher, just a little bit of relief, and all these shorts that are badly placed at the moment for such scenario, they can get immediately crushed. If general markets continue to the downside, this 567 could turn very quickly into 1 million of liquidations for shorts, in which case if we put a second order, then we can still target them, but that time with larger volume. BIT continues to be here in the positive in this area. That is something positive, but watch out, because in all this area we were also in the positive and still we lost the support on the daily. Longs remain so far persistent in the area of 66. I suppose that if we go into the 70s in here, that will be sufficient for us to get maybe into 84, 85. But if the longs pull out in here big into 50s, then definitely this is not gonna survive really very well. Let's look at what's going on in the order book on fire charts, because I remember I saw something very interesting and I think we still have it, so I'm gonna cover it in this video. Look at this. How many levels of price suppression do you see across all this range? Pretty much in every candle there is suppression, with the exception of the 16th of March. At that point, there is not this level that goes up and down with the price. It's the only exception. They pull it out and they put it back on the 17th. And we are in one of those areas once again. We start Monday and we don't have that suppression in here. There's just these mild levels at 95, at 89, and there's a huge vacuum right above the price here in very dark red. So if we can get above 82.7, which is 30 million of resistance, we don't have much resistance up until more or less 88. This is according to fire charts. Let's see if we could confirm that looking at trading light. Remember that this is an area of value relative to my strategy of looking for longs every time that we are on this blue trend line. This is net longs shorts delta, and we enter in that area on the 28th of March at midday. Since then, price has been going lower, but the delta net longs is going higher. And if we place now a trend line touching like this, we are getting a second signal, which is the signal of the breakout. Let's remove this. Let's move it back down so you can see it. That's a breakout with a divergence. Price has been going down, net longs up. So this is where we are standing. This is the hopium that right now I'm consuming for that potential upside. And if I'm wrong, there is a plan. What else do we have? Well, the last time that we liquidated big people, it was longs. We can get one more, but I think the last time we liquidated shorts, it was on the 19th of March, so that is over 10 days ago, so I think they deserve a little bit of love now. Just my humble opinion, my finger in the air, just feeling. And of course I can be wrong. This 600 of resistance right now at 82.7 plus this 400 is a decent resistance. So after these 3 green candles, maybe that's it. We'll see about it. And if we are right, we have all these fair value gaps above the price. Risk is very high, guys. If you don't want to take this long, I completely understand it. Indeed, I prefer that no one copies me. Now we have a very thin fair value gap at 82.9. Then we have one at 83.6. And that could be just it. We consume the CME gap and we are done. My thesis is that, hey, we have such a fat, heavy, greasy, disgusting fair value gap in here from 87 to 84.6. What if, now that everybody's bearish, we go and we take it? And what if we go to 89 and we also take those liquidation levels? Wouldn't everybody get angry if that happened? Maybe. And if that's the case, wouldn't that be precisely what market maker does all the time? Yeah, so I'm betting with a small percentage that that could be the case. And if I'm wrong, I'll use another alpha another time. Guys, if you want to trade this setup with me and you want to do it non-KYC, consider doing it on Bluffing. 10% cashback is what we currently offer up until the 7th of April. So make sure you don't miss it. There's only 50 users that can benefit from this. An alternative non-KYC is BitUnix that gives bonuses for any size of deposits. And if you want to join me on the actual exchange that I'm currently using, which is OKX, and at the same time grab yourself up to 60,000 in rewards, consider using the link in the description for OKX. Any of these links, if you use mine, you're gonna get the lowest fees to trade, which is really great as well. Guys, thanks so much for watching. I'll see you in the next one. Take care. Bye bye.